Welcome to TheoTrade. This is Don Kaufman. I am giving you the weekend review here on January 9th, 2016, and what to be looking for this coming week. Well, 2016 starts off nothing shy of spectacular in terms of volatility. I've been barking up this volatility tree for quite some time, and just this week, it unleashed the beast. Let's not just state the obvious over here, but I'm starting today and this weekend looking at the SPX. But what I'm going to do during the course of this video, this is not going to be like retroactive. Let's look back at this past week, okay? Because what good is that going to do you? We need to look forward. We need to actually dig into what's going on in markets right now, what you can actually anticipate this coming week, and what kind of strategies overall are going to be effective in the midst of what I call the extreme. So I guess you can say, welcome to the extreme. You're in it. Again, kicking it off over here. If you do look at the SPX, to put this into like a magnitude situation, forget about like everybody's focusing, well, what happened since the first day of the year? Listen, that's just a date. It doesn't matter what happened just since Monday. We were already in the midst, okay, of downward momentum and a downward move going back until mid-November. So if I'm not a huge market technician, okay? I make, no qualms about that in any way, shape, or form. But if you are into different drawings, different, styles and so forth, go ahead, draw yourself, okay, some type of a channel over here, and you're going to see, okay, clearly defined channel to the downside. Again, that's just stating the obvious. What is kind of important, though, is in terms of what I would call statistically significant, really just this last few days, the decline that we've seen, we were roughly speaking down in the neighborhood of about 1% prior to the end of the year, down about 1%. Now we're down about 8%. So you've seen, roughly speaking, about a 7.5% decline. 7.5% decline, straight down, very, very little room for pause. So now, what every trader is thinking, when is the bounce coming? It's what everybody's thinking, okay? The issue with thinking this way is that more often than not, retail clientele do not, really function very well in the midst of more extreme volatility. Okay, and that, is speaking strictly from experience, having 15 years of experience at a brokerage firm and having watched, tens of thousands of accounts, and people have tendency to panic a little bit. So first and foremost, I'm going to tell you what to kind of watch, keep an eye on. And I brought up the VIX over here. This is not necessary. It's neither here nor there. Hey, look, the VIX is spiking. Again, Captain Obvious is in the room. Everybody knows the volatility is up. All right? I mean, listen, the market just dropped 7%, so the volatility is up. Okay? The issue with the volatility being up, and the issue that most people have is it's not necessarily that you as a trader, do the wrong thing at the wrong time, but very frequently in the midst of volatility, everything you do, often feels like it's wrong. And it's not because, all right, you didn't pick direction of the market. It has a lot to do with the strategy and trading logic that you have employed during a period of increased volatility. So if you're kind of feeling right now like everything you do is wrong, okay, couple of things that I want to bring to your attention, because again, everybody's like, oh, this week was a rough one. I bought some puts here, I bought some calls here. Okay, so we're in an elevated volatility situation. Everybody's aware of it. When volatility really starts to take off, and when you see the S&Ps just getting smoked into the close on a Friday afternoon, you're thinking this weekend, what the heck is Monday going to look like? Are we going to bottom Monday? Or are we going to pop? One of the worst things that could happen on Monday morning, what happens if we open up? If we open up, lots of traders are going to be like, yeah, this is the relief rally we were looking for. Yeah, well, you know what? I've been doing this for a long time. And I can tell you right now, you be careful, In the midst of volatility, you lose all predictability. When markets rally, that would make me more nervous than anything on Monday, because I know that means what? reload, sell into it. Every trader on the street right now is going to be thinking, okay, sell the rally, sell the rally. I mean, for the last 5 to 6 years, all we heard is buy the dip, buy the dip, buy the dip. Now we're going to hear sell the rallies. Okay, so you can get some explosive upside moves. But before you're worrying about what's going on Monday and so forth, we've got to talk to you about strategy and logic. First and foremost, the most important thing to recognize, I know in volatility you have tendency to look at your portfolio, here's your positions. Doesn't matter what my positions are. Okay? Matters what your positions are. Don't worry necessarily about individual stocks. In the midst of volatility, when you get somebody like talking about an individual stock, they're like, well, take a gander here at Amazon. And, well, again, let's state the obvious. Take a look at Amazon and do a comparison to what that was in the S&P. There was a reason that I started in the S&P. So we go to Amazon, we go show prices percentage over here. Okay, let's state the obvious. Where was it here? It's accelerated a little bit more to the downside than does the S&P. What about Google? Okay, the reason I'm bringing this up, individual stocks don't really matter. I'm going to say that again. Individual stocks do not really make a difference. And you're like, why? When we are in a more volatile situation and the VIX is starting to rock a little bit above 20, you kind of feel like your hair is on fire, focus on the index products. It's all that matters. Indices will drive individual equities. Indices, again, drive individual equities. This is not about Google. This ain't about Netflix. Nobody cares what you think about Apple. But they have an iPhone 6 Plus. Okay? Apple's been in a downward spiral for a period of time. But, again, on a percentage basis, what is Apple doing? It's doing the exact same thing as the S&P. To a T. On the percentage basis, it's doing the exact same thing as the S&P. You're like, well, it kind of bucked the trend a little bit on Friday. Well, yeah, Friday couldn't have closed. The market couldn't have closed fast enough because Apple would have been down if you gave it another 5 minutes on Friday. And you can see this really, and I can show this again and again. So when I say focus on the indices, well, let's have some fun with that. I built a scan for you guys to see. And the scan that I built, all right, is I scanned in the S&P 500. So I scanned in the S&P 500, okay, and I added a study filter, price correlation, positive SPX correlation between 80% and 100% for the past 10 bars. 10 bars is equivalent to 10 days, okay? And then I hit scan. And out of the 500 stocks in the S&P, okay, 405, ladies and gentlemen, have beyond an 80% correlation with the S&P 500. So, okay, I erased, just rest the case right there. That's all I have to go into. This is why we focus on indices, because the indices are where they're going to drive markets over there. And again, if you turn on the media, they're like, well, you got to look at Netflix, you got to look at Google. Who cares? It doesn't matter. By the way, a bunch of stocks are about to have earnings, so all bets are off in there. I say focus on the indices to try to ascertain what's going to go on. Now, the next thing we do, so you kind of feel again like everything you do is wrong in the midst of volatility. Right? You knew the bearish move was going to happen. Great. So you wrote it down a little bit. So now a lot of traders are thinking like, we're going to bounce, we're going to bounce, we're going to bounce, we're going to bounce. Here's the rule of thumb. If you think we're going to bounce, use spreads, use spreads, use spreads. Okay? When I say use spreads, do not try to get cute if you think markets are going to bounce. All right? Vols are heated. That's volatility is heated throughout everything. Take a look, okay, and I want to really enunciate this, but when I say volatility is heated throughout everything, you gotta take a stance back, all right, and just take a look at the volatilities here inside of Facebook. These are the volatilities, and what I'm pointing out is that's at about 49, then it drops off to 44, then it picks up to 53. Do you know what this means? All right, and people are like, yeah, it means there's a lot of volatility, Don. Thanks. No. If you look out 20 days out, the reason the volatility is elevated there, that is Facebook's earnings announcement. You recognize that this next week, with only 6 days remaining, the volatility is jacked up almost as high as an earnings announcement. You're looking at a $5 expected move. So that's when I say everything you think, and you feel, you're going to feel like you're going to do wrong. Here's why I'm saying use spreads, use spreads. If you buy a call or buy a put in the midst of volatility, okay, it doesn't matter what you do. You're going to be wrong. So whether it's in the money or out of the money is neither here nor there. People do this constantly. And over, again, 15 years at a brokerage firm, nobody ever listens when I'm like, stop doing things, okay, in the midst of volatility where it doesn't matter whether you're right, you can still lose money. You never want to put yourself in a position to be right and lose money, okay? Do not buy calls or buy puts when you've got like this inverted volatility skew and, again, feels like the market's hair on fire. Because what a lot of people are going to do, number one thing people do when they think we're going to bounce, they buy calls. If you buy an out-of-the-money call, what's going to happen? You know what's going to happen. The market's going to rally, but the volatility is going to get crushed. So you're going to get smoked, okay? This option may not move at all in terms of price. So then people get cute. They go and they buy in the money options. And if you buy in the money options, buy a 70 delta, it doesn't matter. These are also still going to have extenuating circumstances of volatility risk. Okay, the bid-offer spreads in volatility are going to widen out too. It doesn't matter whether you buy a call, anywhere you buy a call in there, you could be so deep in the money, it don't matter, because when the volatility crush happens, even some of the deep in the money options are going to have volatility sensitivity. Okay, volatility sensitivity, is that when your option cries when its volatility gets crushed? Quite possibly. So when people buy calls, all right, they get crushed because the vol gets crushed. But then you get another faction that says the market's going to crash this next week. And what do? They go out and buy puts. If you buy puts and for 1 second you're wrong in the market, the vol gets crushed. Doesn't matter whether they're in the money puts, whether you buy out of the money puts, the volatility gets crushed, you're going to get smoked. This $2 put, okay, is going to be worth half of that with only 13 days left. So then people get cute and they go further out in time. You want to get cute and go further out of time? No, don't do it. There's even more volatility risk 69 days out. The volatility risk increases the further you go out in time. If you're going to trade in this marketplace, okay, you stick with spreads. You have to spread your risk. Why do I spread my risk? If you know anything about volatility risk, which is Vega, it's your option sensitivity to changes in implied volatility. Okay, what it does is when you buy one option and sell another option, it offsets the volatility exposure. Vice versa, you could sell an out-of-the-money put and buy another out-of-the-money put. It's going to offset the vast amount of the volatility exposure. Now, that's when I say, like, everything kind of you feel like you're going to do is wrong in the midst of volatility. I want to bring up a position that I put on earlier in this week just for argument's sake. I put on Captain One Lot Strikes Again. I put on a one lot SPX. And the reason I did this is just wanted to show it's, again, middle of the week. I put this on January 6th. So this is a live position over here on January 6th. And again, where did we put it on? In the SPX. So let's look on January 6th. And it's an iron condor. And I'm not here to tell you that you need to sell an iron condor. But I am here to tell you, okay, who becomes effective in the midst of volatility. So January 6th. And when did I do it? I kind of did it like, mid-morning over here. That's somewhere in this neighborhood right over here. And you do realize the market slipped over 4% since I put that iron condor on. Okay? What price did I put the iron condor on? Well, I sold the iron for $215. I don't know if this iron's going to make money. I don't know if it's going to lose money. I just don't know. What I do know, though, if I take the exact same trade and I created a duplicate order, okay, so I sold it for $215. Right now, it's trading for about $250. Look how little that trade moved. Premium selling is going to keep you away from making these knee-jerk reaction positions. Premium selling is the way to go. If you want to sell out-of-the-money put spreads, you want to sell out-of-the-money call spreads, you want to do iron condors, go to town. Stick with selling premium. Now, last but not least, we talked about price correlation. Okay, we talked about getting vol crushed. We talked about buying options. If you're going to buy options, use spreads, use spreads. You buy a call, you buy a put, okay, you're going to be in pain. Conversely, though, if you think about that, would you want to sell a call and sell a put? Sure, but you better know what you're doing, because if you sell naked and the volatility explodes, you're going to be wearing that. I'm going to be talking a huge amount about just this the entire coming week here at TheoTrade, in the chat room, in the coaching sessions. You haven't seen anything yet. Again, let's take a look at the expected move this week. This week, the January expected move. Well, in the SPX, there's only 5 days because it's a primary expiration week. The options in the SPX expire Friday morning, so it's kind of confusing. So what we do is we look at the spider. We look at the spider, okay, to get that full 6-day kind of window in here. I say 6-day. Listen, what the week is looking like right now, all right, before markets have opened on Monday, we're looking like we're going to have it's a $6.28 move in the spiders. That is the equivalency of $63 up or down, $63 up or down to the SPX. Now, I put everything in the SPX terms because, again, what matters right now isn't about individual equities. But, Don, I have a Netflix position, okay? Who cares what position you got a Netflix position? It doesn't matter. It doesn't matter. All right? People that put on all these little equity positions, they realize, like, if you're all bullish, you're going to get killed, right? You figured that out this week. But if you're all bearish, you got killed. It only matters right now what the indices are doing, because the indices, we showed the correlation. And what is it? Okay? It's like everything moves with the indices in the midst of volatility, okay? That everything converges upon what the indices are doing. And we just flush the markets that way. So as you look at the decline, okay, and you're thinking, all right, he said it was something about 60 some odd dollars. That's $60 up and $60 down. Where does that take you to? Wild levels. But you have to keep in mind that $60 is a probability of expiring. Now, we smoked the expected move last week. This past week, we had a $40 expected move. We're trading at $20.40. We smoked it. I mean, literally, we traded from $20.40, okay, all the way down to $19.22. It's a 120-point decline. You know what the expected move was? $42 last week. Could we see that again? Absolutely. However, the volatility has expanded. A $60 move, very, very likely. However, during the week, you could see as much as a 120-point move. That is the probability of touching. So the probability of touching is roughly double, okay, that probability of expiring. So you could see as much as a 120-point move inside of the SPX this week. Watch the bumps to the upside, because in the midst of some of the greatest down moves, some of the most wild moves I've ever seen historically have actually been to the upside. I have seen 110-point up days in the SPX. Okay, when was it? November 2008. I'm not comparing this, but I got to tell you, been through some wild trading, and this was right up there. I mean, things started to get on a little bit of a slippery slope. It got serious. Okay, on Friday. With that, I invite you guys to check out the archives here on TheoTrade. Go into the member home. Check out, obviously, the chat room. We're broadcasting each and every day now, Monday through Friday. We're also going to start to kick off some classes in late January. So remember, there's a member chat room archive. Under the chat archive, okay, what do? You go in there, you click on it. Each day is kind of broken up. So if you wanted to see, what we did, for instance, on January 6th, here's all the different sessions we did on January 6th, okay? We've got trades that we also did posted up there. So any shares that we had, if we actually shared a chart or shared a study, you name it, it's in there. I even did something specifically on FOMC minutes. So get into it. Okay. On top of it, don't just go into the member, if you've missed something. That's a lot of stuff to watch, right? So check out the coaching sessions. So we're even going to be doing some evening coaching sessions coming up late January. We're going to be adding evening coaching sessions so that if you're working during the day, you can't do it. I just want you guys to know everything is archived, okay, here at TheoTrade. Every day, every nuance of what we're going to do is all going to be available to you. The classes, they're all part of TheoTrade, okay? Whether it's classes, whether it's coaching, if you want studies, okay, we'll build them out there. That's what we're here to do, is support you in your trading. Save your money for trading. Check out TheoTrade. Check out all of the archives over there. I'm Don Kaufman. Have a good rest of your weekend and enjoy the volatility because we haven't seen it in years. Thanks a lot, everybody. Again, have a good weekend. Bye-bye.